Income and expenditure account is just like profit and loss account. Now students, in case of normal business organizations, we prepare profit and loss account to calculate the profits of the business. But in case of non-profit organizations, the objective is not to earn profits. So the profit and loss account is replaced by income and expenditure account. Remember, it is prepared in exactly the same manner. That is, only revenue items are shown. Revenue items are shown and it is prepared on accrual basis. That means all the incomes and expenses which relate to this year, whether they have been paid or not paid, are recorded in income and expenditure account. Again, since incomes are sources of revenue, they are shown on the credit side and the expenses are shown on the debit side. Now students, some points to remember here are that items of capital nature are not shown. They can be capital expenses and capital receipts. Capital receipts can be in the form of life membership fees or specific donations. They become a part of your liabilities and are ultimately added to your capital fund. Similarly, we can have capital payments. Capital payments can include payment for purchase of certain assets. Such expenses become your long-term investments. They become your fixed assets. So they are shown in the balance sheet. They are not shown on the income side or expenses side. So students, revenue items are shown here. That is the items of day-to-day nature, and this account is prepared on accrual basis. That is, expenses of this year only are shown, whether paid in cash or not, it is immaterial. Now, what are the basic steps that we have to follow while preparing income and expenditure account? Remember, the basic information that is given to us while preparation of income and expenditure account is receipts and payments account. We are given receipts and payments account. This account, I am preparing it in a rough format, has receipts on this side, has payments on credit side and receipts on debit side. Similarly, income and expenditure account format would be like this. All the incomes would be on credit side and all the expenses would be on debit side. So when we actually move ahead from receipts and payments account and try to prepare income and expenditure account, we must make sure that only the revenue items are recorded, right? So in receipts, you would have revenue plus capital. Both items would be here. But out of these, only revenue items would come onto your income side. Similarly, on payment side, you would have both kind of payments, revenue plus capital. But it is only the revenue payments which would come on the expenses side. Right, students? The capital items would then be adjusted into the balance sheet. Now remember, when these revenue items are put here, they have to be adjusted for outstanding and prepaid kind of adjustments. So outstanding, prepaid, etc., they have to be adjusted for, right, to get them on accrual basis, because income and expenditure is always prepared on accrual basis. So the amount that has been paid in cash adjusted on account of outstanding and prepaid items would then appear as income and expenses in income and expenditure account. Now coming to the difference between income and expenditure account and receipts and payments account. Now students, remember these are two different accounts and they are different on various bases. The first basis is nature. Income and expenditure account is very similar to profit and loss account. It is prepared on accrual basis just like a profit and loss account is prepared. Whereas receipts and payment account is very similar to cash book. Rather, it is actually a summary of cash book. I'll write as cash book. Then we have nature of items. In income and expenditure account, only items of revenue nature are shown. That is, revenue items are shown. Those expenses, those incomes which relate to current year are shown here. Whereas in case of receipts and payments account, revenue as well as capital, both kind of items are shown. Then we have period. Income and expenditure account is prepared only for current year, and the values are also of current year values, whether paid or not paid. Whereas receipts and payments account, there is no botheration of the time period, whether it is current year, previous year, next year. If it has been received or paid, it will be entered here. So it is on receipts basis, or we will write it as cash basis, irrespective of the year. Then non-cash items, they are included like depreciation, outstanding expenses, accrued incomes. They are included in income and expenditure account as it is prepared on accrual basis. Whereas receipts and payments account is prepared on cash basis. So such kind of items which are non-cash in nature, they are not included. So students, these are some basic differences between receipts and payments and income and expenditure account, whereby we can say that income and expenditure account is very similar to profit and loss account, whereas receipts and payments account is a summary of cash book. It includes only revenue items, whereas receipts and payments include both revenue and capital items. Income and expenditure account is prepared on accrual basis, hence only current year figures are shown, whereas in this case there is no distinction on the basis of time period. Any payment made or received is shown irrespective of the period it pertains to. Then non-cash items are included in income and expenditure account. That is, items like depreciation, outstanding expenses, accrued incomes. They are shown in income and expenditure account. But in your receipts and payments account, the basis is cash basis. So non-cash items are not included.